What really provoked me to write this article was that I really believe there's been a lot of misdirected comment in light of the financial crisis, but misdirected comment in relation to financial reporting standards and to the performance of the profession, particularly the auditing side of the profession. And I think what we've lost sight of and probably have failed to communicate really well is that, you know, the hallmark of a chartered accountant is the ability to exercise professional judgment with integrity. And we've really got to keep hammering that message home and explaining it and helping people understand the value of what we do. And I guess when I look at the comments I'm talking about, there's a lot of talk about financial reporting, IFRS, and the lack of prudence, and, you know, the assertion that this has contributed to a lot of the problems, particularly in the banking sector. And you'll see in the article that I've included a number of quotes from witnesses at the Banking Commission hearings in the UK. And, you know, a number of really quite eminent people have made some fairly bizarre, in my opinion, comments about the changes that have happened in financial reporting and the manner in which those changes have come about. There's even a suggestion that it was almost some kind of secret conspiracy to abolish prudence without people fully understanding what was happening. And I think they're just missing the point. And Sir David Tweedy, whom I've also quoted, makes a number of very telling points, really rebutting those comments, and I'd really be totally in sync with his views. And he makes the point that prudence, if it's applied in a singular way, actually creates a bias in the way you report financial statements. And what was trying to be achieved was neutrality and transparency, so that people could really understand what makes up the key numbers, and particularly how estimates are dealt with in financial statements. And there are areas where judgment is required, as I say, coming back to my kind of key theme. And, you know, we've got to keep emphasising we exercise judgment and we do it in a balanced and fair way. Just to really close out on that prudence point, some of the commentators referred to what I think they consider the good old days when people could build up buffers and effectively have something squirreled away for the rainy day, so that when things got tough, they'd be able to report kind of okay results by releasing the buffers from the past. And again, there's a very good comment made rebutting that and making the point that actually, you know, the trouble with that system is nobody knows really what's going on. You could be hiding losses just as well as profits. And in fact, what people, I think, forget is that in those days, the financial statements of financial institutions didn't show a true and fair view, and auditors' reports would have specifically identified that. So, you know, I think people don't understand what they're asking for in asking for, you know, the return of prudence and for it to override an effort to get a neutral, transparent, understandable view of financial positions. So I think that's a very big area in itself. Now, there's been a lot of criticism of too much detail in financial statements, it not being understandable, and the auditors not explaining things properly. And, you know, there's a case to answer there. But I would make the point again, in fact, there's plenty of information in financial statements. Okay, it may be somewhat complex to interpret, but, you know, there are sophisticated people reading these financial statements. They were in a position to interpret them had they really made the effort, quite frankly. But there's a lot of positive stuff happening in terms of enhancements of commentaries in financial statements, interpretations of sensitivities, for instance, around areas of judgment, and, you know, there's a real effort being made to make them more informative, more helpful. And I think that's all very positive. Just to comment quickly on auditors as such, a couple of interesting quotes again in the article. And One that really struck me is again Sir David Tweedy, and he refers to an American entity which had been part of the assets, the troubled assets program that they had over there. And in one particular year, the audit fee is quoted as a particular number with a particular standard audit report wording. And the following year, there's a massive increase in the audit fee, and presumably therefore in the audit work, or a change in the focus of the audit work, but the audit opinion was verbatim the same. And he quite rightly says, wouldn't it have been much more helpful had the auditors explained, in a sense, why they were paid so much more, but to put it more constructively, what work did they have to do, and what were their concerns? And it really would, you can see that would give people an insight into matters that are relevantly their concern. Another issue which I think is being actively addressed is the question of the interrelationship between regulators, particularly financial regulators and auditors. And that clearly was an issue during the crisis. And I think, frankly, all stakeholders would acknowledge that. It would have been much better had there been a very open, two-way flow of communication between regulators and auditors. Regulators had a lot of information. They were in a position to take a high-level overview and really had a lot of information that the auditor of a particular financial institution wouldn't necessarily have. And I think there's now a regime in most countries, and it's certainly the case in Ireland, where the financial regulator is on a regular basis communicating with auditors, and there's more of a sharing approach. And that would have been helpful had it been there in the past. I think there's not much doubt about that. And in terms of, if you like, other constructive things auditors can do, I think the communication with the company and its shareholders is obviously very important. And a lot of work being done around audit committee communication and communication by audit committees. And I think that's very positive. Constructive developments in relation to making the audit report itself more meaningful, less of a standard, similar wording for every company, and more discursive comment. Auditors are very nervous about that type of comment because they're afraid they'll annoy their client or indeed be sued by their client. But we've got to get to a situation where people realise that that type of communication is a requirement of and a reasonable expectation of readers. And finally, and I think it's an interesting point, that at annual general meetings of companies, the auditor typically says nothing, or at most reads out the audit report. And I think auditors will be quite prepared, if it became the norm, to be available to answer questions on their audit work and the financial statements. And I think that would give people more of an appreciation again of how the value can be added. So, I think in summary, and I think this is really what I'm trying to say in the article, there's a great service being provided, and we really just need to be much more open and positive in the way we explain what we're doing.